Okay, this is a tremendous treat that we have because the level of the panelists here are just, you can't get a better set of panelists. They're the leaders across the board in the space. And what we're going to talk about is token sales. We're going to talk about business aspects of token sales. And those business aspects include things like what is the legal approach to things, what is the accounting approach to things, what is the taxation, and what are the business considerations when you undertake a token sale. Our panelists include Simon Yu, who is the CEO of StormX, who has tokenized his business. I'm not doing any particular order because I'm not even looking at them. Kyle Wood, who's with the leading law firm in the space, Perkins & Coie, who coincidentally represented, and this was not planned, strangely, I guess with some kind of magic, it represented StormX in their token sale. Nick Sarasulo with Deloitte Tax, who coincidentally represented StormX in their token sale. And the odd woman out is Julia Bradley, who is assistant general counsel at a company called CoinSource out of Fort Worth that has well, I'll let her describe the business. And she is all around dynamics with regard to FinCEN and money services business and that type of thing. All right. So from StormX, we have Simon. Simon, would you give us a few words about where you were before you decided to tokenize your business? I'll ask a follow-on later, so let's limit to that for the moment.
Yeah, so we've actually been around in the cryptocurrency blockchain space for almost 4 years now. So we did a traditional angel round investments, VC, we had a seed round investment, and then I think back in May of 2017 was when we were deciding whether we should go the tokenized route or not.
And what was your business that you were funding at that time, or before?
Yeah, and so we have a mobile application called StormPlay. So we have actually a variety of mobile applications that rewards users for their time by completing micro tasks. So you can check out products, you can check out services, and the future product is you can also complete jobs in order to receive cryptocurrency rewards for your time.
Okay, I'm going to stop you there because I'm going to come back around. By the way, if you do a little Google search on Simon, he is a natural-born entrepreneur, and he's an example of if you have that kind of spirit, starting small is no big problem. He started very small, and he's not done growing yet. Julia, why don't you give us some background on CoinSource and what you do with CoinSource?
Okay, so as Jerry mentioned, I am Associate General Counsel for CoinSource. We are a Bitcoin ATM company. We currently have the largest Bitcoin ATM network in the United States. We are in 15 states currently with over 150 machines. As Associate General Counsel, I'm in charge of applying for money transmission licenses. So depending on how each state defines money in their money transmission license statutes, that determines whether or not we have to actually get a license to operate within that state, because depending on how that state defines money, that could include virtual currency. So although we are strictly buy-sell Bitcoin, that just the buy and sell of Bitcoin could constitute money transmission depending on how that state views money. So that is what I do at CoinSource. This was my first job out of law school. I started working at CoinSource in August of 2016. I knew very little about virtual currency, and so here I am today. We've grown a lot since 2016. We were in, I think, maybe 6 or 7 states in 2016, and we've grown a lot since then.
So Julia works with a friend of mine named Arnold Spencer, who's their general counsel, and he's a contemporary of mine, meaning he's as old as me. And CoinSource is a great example of the value of intergenerational connection. and putting together a strong team when you're building businesses of people with real expertise as opposed to just a bunch of pals, which is great too, but accessing the kind of experiential level is very interesting. And Arnold, a fabulous lawyer, including at one point being a United States attorney. Kyle, tell us a little about Perkins, what you did before you were in the tokenization blockchain space, how you come into it, and again, a little bit about yourself.
Sure. My name is Kyle Wood. I'm senior counsel at Perkins Coie. Perkins Coie is a leader in the blockchain space and has been for the last 5 or 6 years. I've always been a technology transactions attorney, which is sort of the commercial contracts licensing angle for your sort of day-to-day operations of companies. Perkins has a really deep blockchain practice, and so I've been working in that space for the last year and a half, where I started out working with token sale teams, and now I am the leader of our blockchain operations team, where we kind of help operationalize our blockchain companies, get them sort of, their day-to-day contracts and business running so they can operate like the multinational organization that they are.
So, I mean, there's a whole lot more to building a tokenized business or DLT-based business than whatever you do with the token. I think, am I correct in remembering, Kyle, that your main focus is kind of building out the full legal infrastructure of those kinds of companies?
That's right.
So we got things like intellectual property agreements and intellectual property management. We got contracting agreements, licensing, jurisdictional filings to get your jurisdictional and that type of thing. And that's, again, the value of actually taking a businessman's approach, because there's a lot more to these things than just the front end. All right, we have Nick Sarasulo. He's not mentioned on the printed page of your agenda because I was really intent on having a high-level tax and accounting person on the panel, and I frankly have very little shyness. So I reached out, and Deloitte used to be my auditor anyway. So I reached out to the leader in the space in structuring tax and accounting. That's Deloitte. Deloitte made a commitment several years ago, well before anybody else, to being important to the space and being knowledgeable in this space. And so they're far and away. I mean, I tried to get others more involved, all the other accounting firms and whatnot. But Deloitte is far and away the leader in structured tax and accounting in this space. So we were fortunate to get Nick, who is a major player in that division. Nick, give us a little of your background, again, before the advent of tokenization, and then the kind of things you're doing now.
Okay, great, thanks, Jerry. So Nick Sarasulo, I'm with Deloitte Tax. Been with Deloitte about 10 years. Prior to getting into blockchain and cryptocurrency, did private equity, venture capital, variety of cross-border, global transactions, carve-out deals, seed funding, leverage buyouts, that sort of thing, for both, sort of prominent East and West Coast private equity and venture capital. Worked on their portfolio companies. As a result, kind of worked with startup portfolio companies, sort of, day one issues, as well as developed cross-border multinationals that need sort of a variety of different cross-border advice from a variety of perspectives. Got into the cryptocurrency space because one of my clients was doing a tokenization transaction. They needed our advice. We're a leader in the space. As Jerry mentioned, we invested a lot 5-6 years ago, and we've been continuing to invest and involved with the kind of technology and the market trends, work very, very closely with Perkins Coie to get in there day one. Because what's unique about this space, right, is you sort of have a startup business that has a giant influx of capital, right? So you have a $40 million day one startup, and you're dealing with all the startup issues, but you also have mature company problems, right? So you have the same problems that a 40 jurisdiction multinational has, but you have them from day one with maybe a very lean crew to deal with. So what collaboratively Perkins and Deloitte does from day one is to make sure you get it right. So we have about, at Deloitte, we have 250 people in our tax practice alone, about 55 partners and 200 plus so other practitioners across the jurisdiction. And we have about 40 countries that are now doing this. So Canada's big, Japan, Singapore, UK, to name a few, right? And we have partners that we've sort of developed. We have weekly calls, stock consensus, globally on sort of what's happening from a regulatory and tax perspective around the world. So, getting that right from day one is something Perkins and Deloitte works very hard to do. Because if you get into a structure that's bad from day one, it's sort of counterintuitive because many people think of these tokenization transactions as capital raises, which in a traditional angel funding or Series A funding round is typically efficient. Right, you don't wind up with a tax bill. These tokenization transactions, they're taxable day one. So when someone raises $100 million and they do it through a U.S. partnership and they live in California, they have a $53 million tax bill day one, right? So that's significant leakage.
So Nick, we'll get to the substance of this stuff in a second.
Sorry.
That was a very nice introduction to
I
yourself.
can't help myself. I'm so excited.
But I did have a question arising out of it. Are you saying there's 250 tax professionals overall, or just in the crypto space?
Just in the crypto space?
Just in the crypto
in the
space. Because I know Deloitte has to have a lot more tax people than just 250.
That's right.
But 250 just in the crypto space is astounding. So you can see that they're kind of sucking up a lot of the best of the crypto dynamics going on in this regard. All right, let's go back to my favorite panelist, all due respect to the others, because I'm a huge lover of entrepreneurs. Simon, you had this really interesting business. You had very professional and smart capital backing. Give us a little feel for the boardroom dynamic and of getting to the point where you felt that you were advantaged by choosing going a tokenization way, and also a little bit about how you pulled a bunch of old line traditional investor fuddy-duddies along with you.
Going to the last question, I guess, we had one of the hardest times raising funds initially because we started in 2014. I talked about it a little yesterday, but it was right after Mt. Gox. It was right after Silk Road, and people just thought, Bitcoin and crypto was all money laundering or drug smuggling. And anytime we brought up Bitcoin in a pitch deck, it was just, awful, right? But I mean, we still stuck by it, and we really wanted to prove that, the technology was there, and we wanted to reward people free Bitcoin and cryptocurrency. And so if people don't have to risk their money buying it, then we can get mass adoption, because now they can check out the product and the technology without having to fear losing their bank account. And so that's how we started. We kept growing our users, we kept growing the products, the partners and the brands that we work with. And we just grew an organic business, and we bootstrapped and we were profitable. And then eventually we were one of the first platforms that actually had a global user base in the blockchain space. And I think even today, there's still, that's one of the issues. There's a lot of these white papers coming out and ICOs, but there's no product that's already there. And how can you be a utility token if you don't actually have a product? Is one of the questions that I always ask. But just for us, it's really important that we have lawyers and tax accountants that really help us get certified and be sure that we're compliant. I think that's one of the main things that we're always looking for, because nobody knows what's going on. SEC just comes out with a vague report every few months and then just says, all right, this is it, but there's no details. And so we just want to run a business, and we want to stay compliant. And I think that's the case for most companies in this tokenized space. And it's really great that a company like Deloitte stepped up, Perkins Coie stepped up early on, because there's not enough of these guys to really handle it. And sorry, so I kind of went off topic.
But how did you see tokenization taking your business to a different level, and what differentiating advantage did it bring?
Yeah, so one of the most exciting parts about tokenizations that I like is, imagine just back in the day when Phil Knight said, I want to create a waffle iron shoe, but I need $10,000 to get this started. And then, most people thought he was crazy, or, it doesn't make sense. But then some people that believed, hey, this makes sense. I actually tried out the shoe, and it's really comfortable. And I think that if you build this, then, it will be very beneficial. So eventually, I put in $100 for this $10,000, total, funding that Phil Knight was looking for. And now, 40, 50 years down the line, you now have the ability to buy $1 million worth of Nike shoes, and you can actually use it. I think that's a really interesting opportunity that this is creating. And the ability to be able to actually use, like crowdsource and, kind of the Kickstarter model, but have the ability as an early supporter be able to buy a lot more of these in the future is one of the most exciting parts. Because for me, from like an equity, if I buy Facebook, I buy, stocks as a piece of paper, I can ultimately sell it as a security, but then what can I do with it? I can't actually use it to sell advertising. The liquidity is gone as soon as, that Wall Street decides to dump on it. But as someone that actually uses Facebook as a business for advertising, I supported them really early. If I could actually use them for advertising, that would be really awesome. And so for us, it's like, hey, we have the same concept. We already have a lot of users, and kind of like Steemit, nobody really creates a tokenized version of Steemit because the community is already there. There's a network effect, and everyone uses that for a publisher. But for us, it's like, hey, for the jobs, for the market, cryptocurrency, we were one of the first adopters. Let us come in and build this adapter, build this network, and really benefit the people that were in supporting with us from the early days.
Simon, what's the name of your token?
Storm.
And what platforms can one trade on it with it or whatever?
So we can't really comment on secondary exchanges, but you can look it up. Google.
You can't comment about which exchanges list it?
Unfortunately not.
Okay. Well, like I said yesterday, what you say matters, and this is something that they didn't realize you'd think would matter, but that's fine. Why don't you hand the mic to Julia? Julia is not in the token sales space from her own company, but she allows people to buy and sell Bitcoin through her CoinSource kiosks. And she was kind enough to do a little research on money transfer, FinCEN, potential regulation of tokens. So Julia, from your knowledge of the space, when one issues a token that can trade in whatever markets may evolve that ICO CEOs or token sales CEOs don't want to talk about, what is the FinCEN, bank secrecy laws, AML, KYC dynamic that appears to be the case?
Well, I'm going to give a very lawyerly answer and say it depends. It definitely depends on the type of token that's being issued. Really, all that we have to go on this issue is this guidance that FinCEN issued in 2013. The first token sale, I looked it up, this may be incorrect, but the first token sale was well after that. So really, all we have to go on in this area is this guidance that FinCEN issued, and they discuss decentralized and centralized currencies, virtual currency. So with a centralized virtual currency, there's an administrator, and the administrator basically creates this centralized currency, and you can only use this currency within that administrator's system. FinCEN defines administrator as a money transmitter. So if you create a centralized virtual currency, you become an administrator of that virtual currency, and you are a money transmitter. This is in the FinCEN guidance. And then again, they have a section for decentralized virtual currency, and I actually came prepared and brought that with me. So this statement says, a person that creates units of convertible virtual currency and sells those units to another person for real currency or its equivalent is engaged in transmission to another location and is a money transmitter. So I would say that that pretty much sounds like it could include a token sale. I can't really, this is not legal advice. I'm not saying.
Oh, by the way, I was supposed to say beforehand, everybody's opinions are their own. They're not giving you legal, tax, or accounting advice. They're not representing the views of their firms. All your specific dynamics you're going to have to investigate for yourselves. Sorry, I often forget to say that kind of thing. But there's also another key word in that release, the word convertible. So it may be that, and I'm not fully conversant with Simon's dynamic, but it may be that if you basically don't allow it, at least within your own ecosystem, if people go out and deal with it and trade it I guess it's their issue. But if it's something to be used in your own ecosystem, it might not be, right, a FinCEN?
Right. So the key issue is whether or not it's redeemable. So if your token is redeemable through an exchange, if you can later exchange it for fiat currency, then it falls within the lines of money transmission. If it's just, a video game, if you have a video game and you issue, these little tokens that you can only use within the game, that's not money transmission. But these tokens that are actually convertible and you can later redeem for fiat currency, that falls more within the lines of money transmission.
And it's not the end of the world, right? I mean, you need to do an analysis, and if the analysis comes down that either you certainly must or you have a probability that you might be a money transmitter, then it's a registration process, right, Julia?
Right. So it's a risk. I'm thinking of, yeah.
Risk
so you have to
mitigation.
analyze the risk and the burden of actually registering with FinCEN. It's not difficult at all to register with FinCEN as a money services business. So I would say that it's better to be safe than sorry and just go ahead and register with FinCEN rather than, and FinCEN has not begun to even look at this. A lot of people are speculating as to whether or not token sales would fall under money transmission. So, but again, it is better to be safe than sorry, and it's not very difficult.
Do you have a comment, Cal?
I do. So I think what she's driving at is it's very fact specific. Everybody's got to do this. To say that it's easy to register as a money service business is true. It's also really expensive.
Well, and registering as a money service business means you're admitting to certain obligations that you have under the applicable regulations. Isn't that true, Julia?
Yes. So in addition to registering with FinCEN, you have to employ an anti-money laundering and know your customer policy. I think that it's wise to employ these policies for securities reasons as well. I can't really speak to that. I don't have a lot of experience in securities law, but yes, in addition to registering with FinCEN, you do have to employ these anti-money laundering KYC policies, and that is that's a very daunting process.
Which some people might say is a very good practice regardless of the requirements, right?
Absolutely.
Let's move to Nick. Nick, tell us about, we've got a little bit about the thought process around a business person's approach to tokenizing a business. Number one, tell us about when we should talk to somebody like you and or Kyle. Should we wait until we've raised about half of our ICO, our token sale proceeds, or should we never talk to you? When should we go talk to you? And then when we talk to you, what are the kinds of tax and accounting, we'll get to legal in a second, tax and accounting issues that you'll kind of consult with your client about?
Yes, I think that's a really good point, Jerry. So there's a lot of, news sensationalism, and there's been a lot of bad actors early in this space, right? And those are people who sort of didn't seek the right advice or sought advice from people who are a little too cavalier with the rules, right? And these are serious rules, right? If you mess up and you violate SEC law, you could go to jail, right? So there's serious skin in the game.
Same if you mess up under tax law.
Right. You could have a gigantic tax bill, right, if you do this wrong. And I think Simon alluded to it earlier. I think the companies that are engaging with the right counsel and taking things very seriously is important, both from optics and getting it right from the start. So, I guess what I like to say is there's no clear guidance sort of all around, and it's an evolving space, right? But why not put yourself in the best position possible, and you want to think through things, think through your business day one, and comply with everything you can and treat it with that kind of seriousness. So I think that is a real distinguishing factor from sort of going to market. Anyone can get out there and write a white paper. It's a lot different when you've done all your diligence, done the white paper, have a developed product, have something that's not just trying to evade a security law, right? It's like I have a product that's going to replace an existing protocol. I have the right advisors on board. I have the right legal team. I have the right tax advice all through the thing. I think that tone of seriousness really, really carries a lot of weight. So early and often, and with the right advisors.
And talk about some kind of options around around structuring. I've come to understand that the that often the optimal dynamic is to have a token issuing subsidiary in the Caymans. It's very similar to what I recall from my hedge fund days, where that kind of not only can advantage the issuer of the tokens, but also the persons getting into it because of the flexibility of those tax jurisdictions. And is it something that it's too late to structure that way if you haven't done it at the beginning?
Yep, and I guess along a similar tone, right? There's an incredible amount of blogging and the stuff that's out there on the internet. The amount of sort of wrong tax advice and wrong legal advice that's out there is incredible. And the amount of people that come to me and say they know what a Reg D is and they know what an offshore structure is and they know what a Swiss foundation is incredible. And it's really just that. It's just headlines, right? So once you get under the hood and you start investigating some of these things, you realize quickly that sort of the blogs are wrong and there's no playbook, right? That just isn't the case. Like what we do for our clients collaboratively is to say, like, what is your business, right? Like, is this a global business that you're looking to expand, and are you gonna quickly have operations places elsewhere? And a lot of times people don't know, right? Like you don't know. It's hard to assume day one. You're like, look, I have this vision, I have this product, I know it's going to be big, but I don't know if the UK will adopt this faster than Canada, right? So often what we do is search for a flexible jurisdiction that we can sort of grow with and expand as the business expands, and then seek where the best sort of headquarters are eventually. But yeah.
Yeah, and one of the interesting things, we talked yesterday, if you're at my presentation, about overlapping and sometimes inconsistent regulation. It might be that for securities law, you're dealing with a security, and the tax and accounting treatment of that is different than selling a product. But it might be that the tax authorities don't care that you call it a securities for securities law purposes and want to call it a product, a commodity that you're selling. So it might be that you think you're raising capital or capital against future sales, you might think, and with consulting a Deloitte and a Perkins Coie, that that's something you capitalize on your balance sheet and don't pay taxes on. It means it goes into on the balance sheet side rather than the income side. But tax authorities might come in and say, oh, you just raised 10, 20, 30, 850 million if you're Telegram. And by the way, that's subject to, what's the corporate tax rate now?
21% plus state.
That's subject to a 21% tax. So we'll have, what's 20% of 850, whatever that is, we'll have that, please. And if you haven't done that, Al Capone went to jail for that, right? So
yeah, I think
it needs to be paid attention to.
That's a really important point, right? Is that I think, one, the semantics around things, right? So security has a different definition depending on what sandbox you're playing in, right? So for Perkins, it's different than Deloitte. It's different than, right? It depends the contextual meaning that you're in, and that has serious consequences with it. But in general, right, a token exchange is the exchange of property, right? So if you think about, I guess, commercial transaction history, right? We went from caveman, club for meat, that's a barter exchange, to then fiat was introduced to facilitate, right, transactions, and people are used to dealing in cash. Then the internet came along, right, and the internet, e-commerce changed the way that people think about things, changed tax rules, and now we're back sort of full circle to a barter transaction, a token for a token, or a token for, right, token for ETH, for instance, on the token launch. You're back to a barter transaction that's fully taxable day one, right? So that is a serious consideration, and you want to think about it. And I always say you need to like live within your structure, and you need to know your business, right? And so you need to be honest with yourself day one, like, what do I really have in terms of a global business? And not only on the raise, but how is that token going to operate within your structure and flow, right? So if you have an advertising token that's going to replace a current advertising protocol, what does that look like every time that token changes hands, right? So mapping those out, and that's really your new supply chain. It's just all virtual. So thinking through that is very critical day one.
Right, and from the side, you gonna say something, Doug?
I was just gonna say, and up front, right? Because I think that's what he was gonna say, is that you can't, you can't get a little bit pregnant on this. Like, it's.
Yeah. So I was going to mention that from the point of view, if you're a token investor, a hedge fund or personally, you might want to take into account whether the issuer of that token knows enough to follow the tax and accounting rules. Because if they're not following the tax accounting rules, they got at least, last year they would have a 30-something% hit? If they did, what was the number?
Yeah, 35.
35% hit on what their sales were, and this year 21% hit. So that means that if they haven't planned for that, there's an unrealized evaporation of their assets that's going to happen. So what will happen to their tokens? And at the same time, if you're an issuer, you need to reserve for that and satisfy your obligations.
Yeah, another thing we found, so we've advised across hundreds of these, both in the design and the launch and post-launch. And what we found is that the people and the engineers who are ahead of this, they can build it into the functionality up front. So a lot of times, if you sort of wait, you have not only a sort of a build to a tax problem, a structure flow, but you have maybe a core engineering design that's really hard to fix. Versus, if you're talking about,
It's an excellent point.
Yeah.
By the way, one of the big differences between virtual private currencies and government currencies is you cannot use the former to pay your taxes, right? You have to pay it in the government currency. So again, a token issuer has to plan, how do I liquidate the proportional amount I need to liquidate to satisfy my tax obligations. That has some effects that around the value of your currencies and and your whole process of doing that. So I mean, frankly, I have a bias toward legal compliance, but in having run several businesses, it's actually the more important thing is structuring tax and accounting in any business, frankly. And don't want to give you a big head, but that's the case. We talked plenty yesterday about securities, and the only securities lawyer up here, you're not a securities lawyer, right? The only securities lawyer up here is me, so we're not going to talk a lot about it because I'm moderating, but I am fascinated with the infrastructural dynamics of legal matters in these cases. Kyle, why don't you give us an overview of the kind of infrastructural legal processes, arrangements that you dominate?
Yeah, no, that's a really important point, and I think kind of what we were talking about before about coming early in the process is that there's a lot of things that we can kind of help guide you on and fix before you get out and you do a token sale with some fly-by-night ICO in a box type company where they're just packaging something for you. All of our transactions are very detailed. We start at the beginning and we do very detailed background checks on everybody involved in our token sales before we even bring them on as a client. We have teams of people that address, commodities issues, securities issues, business operations issues, money transmission, all of these kind of things and that all goes into the very fact-specific analysis that we do in evaluating how these token sales are going to be launched. And so that goes, and then even beyond that, we then get involved in the marketing when you sort of heard Simon back off of answering a question earlier, and that was a good, because that's what we told him to do.
You did that behind my back.
But those are important things because, as Jerry was saying, what you say matters. So as people get into closer to their token sales, they want to market these things, and depending on where they are, if they're doing pre-sales, there are a variety of different mechanisms you can do a pre-sale, and if you're out marketing, you can blow your pre-sale and make it an unregistered offering.
And Kyle, just give us you have something?
Yeah, it was just that's an excellent point, right? Is that that upfront coaching is invaluable. You want to get good advice. You don't want to try to go this alone because it's unclear. You have sort of the best accounting and legal folks in the world, and there's not clear answers to this stuff. So you want to get good coaching because a lot of this stuff is hairpin triggers, right? Something so small and might seem just like a formality is a death sentence if you mess it up. So some of this stuff you just really want to get right and just don't go it alone,
And Kyle, go ahead and give us a little bit of visibility into the nitty gritty of the kind of IP arrangements you set up, things there's what people wouldn't think about but need to be attended to.
Yeah, for sure. So with respect to sort of, we were talking about different tax structures. And so when you set up the Cayman Island subsidiary, one of the important things that we do in conjunction with Deloitte is to set up intercompany services agreements and IP transfer agreements. And part of the reason that you transfer your IP early is to get a better basis in that IP before the token sale. So that's one of the aspects. The other aspects that we're starting to see a lot is in the consulting world and in just vendor type, token-based compensation.
And your employees as well.
What's that?
Your employees as well.
Yeah, and token-based compensation is a hot button issue right now. For anybody out there who's doing consulting, one of the biggest issues that we're seeing is when you're getting people are getting compensated in tokens on the amount raised. So could trigger an unwanted sort of broker-dealer issue.
Right, you're not allowed to receive compensation related to the issuance of an investment contract or security unless you're a licensed FINRA broker-dealer and a registered rep under that, right? And a lot of exceptions that were thought to have existed a decade ago have been wiped away in that regard. The other thing is that, correct me if I'm wrong, but let's say you haven't actually sold any tokens into the market, there is no market, and you're providing some tokens to your vendors or employees. If you fail to go get a 40 to 100 page valuation of that token at that time, the IRS can come in later and attribute a later market valuation to all those person who received it, and they suddenly have an unexpected tax hit and no US dollars to pay taxes. Is that correct?
Yeah, so again, it goes to hygiene, right, and knowing what you're getting into. So, right, token compensation, a lot of people will maybe build a token locker, right, and what terms are connected to that token locker? Is it just the time-based lockup, or is it time and services? If CEO quits, he gets no tokens, right, and I take them back. So kind of core concepts that have been around for a while in terms of stock options, stock comp, but in the application of the token sense, you kind of lose sight of it, right? Because you have an engineer building you a token locker, and it's in the code somewhere, right, instead of an offering document, and you kind of lose that, and then all of a sudden I have an inadvertent tax result because of it. So just, again, getting that advice up front and being super diligent and super cautious as you go through the product development.
And there is an evolving and developing professional space for valuing tokens. My friends at Deloitte introduced me to what at that time was the leader in the space, a group, the name escapes me, but...
Technos we work
yeah,
a lot
that's
with.
right, out in California. But there are others now. I mean, it's a profession that is remunerative, so others are getting into the space as well.
That's right. And the valuations here are funny, right, because the volatility in this market's crazy, right? So you get a valuation, and a week later it's obsolete. So being super diligent, like your value could go from $0 to $1 million, right, in a couple weeks. So getting that real time is key.
Unlike private issuances of securities where you can rely on a valuation for a while in this regard, you might have to keep reiterating that process. And frankly, the pricing of token valuations is one of the few areas where professionals are charging something that is within the realm of reasonableness. At least in my opinion, the number they quoted was pretty reasonable. But it is a limited dynamic. Look, we're going to be impinging upon the lunch hour in a few minutes, so I don't want to go beyond a period of time where audience questions can't be entertained. So I'm going to throw this open to the audience for questions to this incredibly august panel. So, sir.
A question.
I'll repeat it, but whatever.
I guess my question is for whoever feels most qualified. In terms of using an intermediary service to, buy something off of Amazon, pay somebody in Bitcoin, they buy something for you, send it to your house. What are the legalities for something like that?
Okay, so the question is, if you use your cryptocurrency to buy something, let's just say, let's go starting from Julia. Are you a money transferer? And do you have any kind of a tax hit? So, Julia?
I would say as far as the money transmission goes, I would say yes, you would be a money that is like the
For a consumer to buy an item?
No.
No.
The third party.
The third party,
The
but not the consumer.
Right, the consumer, no. So in the FinCEN guidance, a user of virtual currency is somebody who owns virtual currency and uses it to buy things, and that is not a money transmitter. A money transmitter is strictly a third party that takes the consumer's money and gives it to Amazon. That is strict money transmission. That
So
is
you're
what
okay
money
as a
transmitter
consumer,
is.
but if you're the online product seller, you might have to look at registering as money transfer business. From a point of view of taxation as a consumer, well, we're very used to going on Amazon and buying a whatever, a widget, and there's no tax consequence. Is it different in this regard when you use virtual currency? Either Nick or, but probably Nick is the right guy.
Yeah, sure. So you mined a Bitcoin in 2013 for a penny, right? You have 1 penny of cost basis in it. You sell it, you give it to someone in exchange for services that they provide for you. That Bitcoin today is worth $15,000. You have 14,999.99 gain on it, taxable.
Right. So the interesting dynamic is when I go buy my, my 16 rolls of toilet paper on Amazon with Bitcoin, strangely, I have to pay taxes on that. And as well, and it was always clear in my mind, but the latest tax reform made it doubly clear. Whenever you convert a Bitcoin to an Ether or to whatever else, that's a taxable transaction as well, which is kind of hard to quantify, but you have to do it. Any other questions?
Hold on. One thing about that too, just really quickly, is that you have this basis increase, but you also you could subject yourself to AML, KYC problems. That is, all of a sudden you could be trafficking, right? I mean, there are cases out there where the SEC has investigated people for exchanging money, like you give me your Bitcoin, I'll give you cash, and not knowing where that money came from. That's a very big risk, and the SEC is looking at that.
We
very
had some
carefully.
discussion of that last night. In my,
sorry.
Yes, sir. No, it's okay.
Yeah, I'll paraphrase Jerry, if it's okay, from yesterday. He sort of felt that all token sales, all ICOs were probably going to end up getting sued. A lot of people would go to jail. It's really for Kyle, do you agree, or
I don't know.
So just a little matter of clarification about that. The fact of the matter is there's a growing plaintiffs bar attention to this dynamic. And as everybody's excited about decentralization. Well, the United States has had decentralization of securities law enforcement since the 30s, right? It's called private rights of action. So the problem with all token sales, in my estimation, is a class action around them will not be disposed of on summary judgment. But in any event, if you want to answer the question, you can, but I'm the kind of guy who takes really strong positions because I just don't care. These guys might need to leave their options open.
That's true. We do. I mean, I think it's unclear what the future holds.
So I just want to add one point to that. It's extremely important to have good lawyers like Perkins Coie and tax attorneys like Deloitte. So there's actually only a handful of these guys that actually understand the blockchain space. And so up till now, there's been a handful of bad actors in the company level, also with public companies, putting blockchain, and I think SEC stopping that because the stock price is going up, like Hooters and a couple of these other guys. But there's been.
By the way, it wasn't Hooters; it was a franchisee.
Yeah,
of
franchisee
Hooters.
that owns the Hooters. Sorry about that. Yeah, a legal disclaimer. But lately, what we've been seeing more is a handful of bad actors in the legal and tax attorneys. So they're saying that they're blockchain lawyers, but they have no idea what's going on. And I think that's one of the biggest issues because as a company, going back to Nick's point, there's significant risk of us getting shut down, and there's also significant risk of us going to jail. And sometimes, even on panels, I've seen companies talking about their token price going up and talking about like a security, and it's recorded. And oh my gosh, these guys are poorly represented, And that's one of the biggest risks that I see right now is the next level of people that are going to go to jail because of bad lawyers and bad tax accountants.
If you are a service provider, this is the kind of client you want. He wants to learn, he wants to take advice, he wants to be compliant. As I mentioned last night, the 25-year-olds who want to dispute your understanding of 30 years of securities law, you don't want those clients.
Yeah, and we do a tremendous amount of diligence. I think Kyle alluded to it earlier, and we only partner with firms with like the utmost integrity, right? We evaluate management, we do background checks, we know everyone in the company. You know, we really take a hard look at the business, and frankly, we turn clients away, right? So I think, as you can see,
Clients away that we take.
And,
Right.
the other comment on
Right.
Simon's comment is, I've been at this just because I think it's very, very cool for a year and a half, and I still don't have my head entirely around it. And so anybody, as Simon says, who's that's funny, who gets into the who tells you he's a professional, she's a professional in this space, and hasn't been in it for, I mean, literally, it's a flood to understand it. At least a year, I would move on. We're going to take one more question because it is lunchtime. Yes, sir.
This question's for Nick. You mentioned that there are some firms that are experts at the valuation of these ICOs. I was wondering if, what the basis of that expertise comes from. What assumptions have you used in the valuation of these ICOs? And secondly, Deloitte is one of the top, accounting firms knowledgeable in this space. Why is Deloitte not, in the space of doing the valuation?
Well, no, I'll repeat the question. The question was, so how do you value tokens, and why doesn't Deloitte do it? I can respond for Nick. Deloitte does do that kind of thing from time to time, but generally my guess he's going to say is when they're representing somebody in the space, they'd rather have an outside party do it, but go ahead.
yeah. So we actually we don't do the true token valuation. What we'll do is value the IP that's behind the token, right? Like, and that's a normal IP valuation. The actual token itself valuation, when it's minted, let's say, is typically done by third-party firms, and we have a couple that we work with that I can refer you to kind of offline. But Deloitte sort of valuation has opted not to do the token itself valuation for a variety of reasons.
And can you give a couple of factors that you've seen these token valuators look at when they look at valuations?
Yeah, I actually can't speak to the true valuation of the token because that's not my area in terms of how they do it. But I know that the firms that are good and are respected sort of apply core valuation principles, right? They're kind of standard across whatever you're valuing. So we like to say our valuation firms are old guys with white hair who do cool things, right? So the firms that we refer you to are trusted in sort of integrity, have a lot of experience, and they're sort of leaned into this space and have been doing it for a while. So you don't want, if you're choosing a valuation firm, you're doing it, right, to protect yourself, and you want to make sure you get good advice, because typically in an argument, evaluation is a weak link, right? So you want to make sure, if you're paying for it, you want to make sure they're not learning on your dime, they have experience, and that they have good credibility in the market. So I'm happy to refer you to some
Net, this is an area where you rely on an expert who has credibility, and you don't really care about how they get to the token valuation. You care that you've protected yourself because you used a credible expert to do it. I mean, and they're just going to use typical valuation dynamics, comp dynamics, return dynamics, discounted return dynamics, things like this. They're just going to adapt it to this space. All right, I think that's all the time we have. Don't want to keep you from lunch.